Good morning, everyone. Let's take a quick look at the latest move across the US dollar, crude oil, gold, and dollar yen, and what's driving the sentiment in each market right now. So, starting with the US dollar index, the dollar index weakened in the first half of the week, slipping below the key 98 level to 97.62. The July CPI data showed only a modest rise in consumer prices, keeping alive the possibility of a Fed rate cut as soon as next month. With underlying inflation still subdued and signs of labor market softness emerging, the markets are betting Powell's speech at Jackson Hole on the 21st could open the door for a September cut. If the Fed continues easing, the rate differential with other major economics could narrow quickly, weighing on the dollar against high yielders. From a technical view, the index remains below its 9-day moving average at 98.37, with RSI under 45, both pointing to a weaker bias. A drop back through 97.62 could accelerate losses towards 97.49 and even 97. And on the upside, 98 and 98.37 are now key pivots, with resistance near 98.67 and 99. And now moving to WTI crude oil. The oil is holding around 62 a barrel after touching 61.35 earlier in the section. Traders are now watching EIA inventory data and signs of seasonal demand slowdown as the US driving season winds down. And July CPI data showed tariffs pushing up import cost, but diesel demand, which is a key driver for oil, appears to be softening. And both the EIA and OPEC expect global production to rise this year, while US output could dip in 2026 as supply growth shifts elsewhere. Trump's upcoming meeting with Putin in Alaska adds a geopolitical layer, but markets doubt a swift breakthrough. And technically, prices remain capped below $70 and have broken out of a symmetrical triangle to the downside. And immediate support is at 62, then 61.6 and $60. If 62 holds, a rebound towards 64.42 and 65.76 could develop. But the broader descending channel still suggests underlying volatility and bearish pressure. Then spot gold. Gold built on Tuesday rebound, touching 33.70 on Wednesday as the softer dollar supported demand. The July CPI data kept rate cut hopes alive, but upside momentum is still restrained, partly on optimism around the potential US Russia progress. And technically, gold remains in a near term uptrend, with first resistance at 33.70 and 3400, then stronger resistance at 34.39 to 34.50. And on the downside, key support lies at 33.31 and 3300. The bulls still hold the advantage for now, but follow through buying will be needed to sustain a push towards new highs. And last but not least, the dollar yen. The dollar slipped to 147 against the Japanese yen, extending the losses from earlier in the week as the US inflation data boost the September Fed rate cut expectations. Meanwhile, the markets still expect the Bank of Japan to proceed with gradual policy normalization supporting the Japanese yen. With little fresh data due midweek, the traders are focused on Thursday US PPI and Friday's Japanese GDP figures for the next catalyst. And from a chart perspective, a dollar yen has held above 147 support, with deep buying suggesting scope for a rebound towards 148.5 to 148.55 and potentially 149. A drop below 147 could see a test of 146.8 with a deeper move towards 146 if selling pressure accelerates. So to wrap up, the dollar is under pressure ahead of the Jackson Hole, crude oil remains range bound with a bearish tilt, gold holds a slight technical edge on Fed cuts bet, and dollar yen is at key inflection point. As always, upcoming economic releases and central bank signals will be crucial in setting the tone for the next move. Thanks for watching.